Thanks so much for tuning into this conversation. Samhi Hotels, which is a recent listing, has released the Q1 numbers, I presume, on account of the need to comply with the norms of giving out all the previous period financials within a particular time of listing. This is not the quarter two release, which will probably come in a few days, but it was important to take stock of what's happened in quarter one and maybe get a color, if not exact numbers, of course, of what has the quarter two shaped up to. And to do that, Mr. Ashish Jakhanwala, he's the chair and MD and CEO of the company, joins us right now. Ashish, great having you. Thanks for taking the time out. Could you sum up the numbers as they have been reported in quarter one, and maybe some color about whether that's the kind of momentum continuation that you might have seen in quarter two, if you are at a liberty to talk about that a bit?
Yeah, sure, Neeraj. Thanks for having us here. So in quarter one, just broad parameters on the operating performance, because that's really critical. So if you look at the operating performance, the occupancies were slightly lower than the last year. So they were about down by 218 basis points to 70.5%. The good thing was the rate momentum. So the actual average rates grew by about 17.7% in the first quarter year on year for comparable hotels, right? Now that's really an important benchmark to see how the sector is going to do over the next few quarters, right? So overall RevPAR, because often people tend to create too much noise about occupancy and rate separately. If you look at RevPAR, which is nothing but revenue available per room, that actually grew at about 14.2%, right? So pretty healthy growth year on year in the first quarter. At a hotel level, our overall income grew at about 14%, 14.5%, which is kindly correlated to the RevPAR growth because our F&B revenues are not very high. As a business, that's not the model we pursue. And our EBITDA growth at a hotel level was about 12.5%. Now, EBITDA growth could have been slightly higher, Neeraj, but on a year-on-year basis, we need to take into account the fact that last year, first quarter, all hotel companies had a cost basis which was significantly lower because of pandemic, right? Lower headcounts, pay cuts, and all of that. So actually, on the same 14.5% revenue growth, on a normalized basis, the EBITDA growth will be 14.5% plus and not less. This time, the EBITDA growth is slightly muted compared to the revenue growth only because of the baseline effect of the last year low cost, right? So that's really the headline number when it comes to operating performance, right? The second big change which has happened with Samhi is, of course, the fact that we have significantly reduced our leverage. So our net debt has gone down from about 2,850 crores to about 1,830 crores.
Yeah, it's that. Sorry, I just want one clarity. The EBITDA number muted, yes, but am I getting the number wrong? Because as per my math, it was a lower number relative to the year, not just in terms of the growth, but the absolute number is lower than the corresponding quarter last year. Is that a wrong number?
Yeah, so I'll clarify, Neeraj. So if you see what's happened is that there was 11.5 crores of ESOP expenses, which was not there last year. And there was about 6.5 crores of one-time expenses. So the ESOP expenses, just to clarify, this year we'll see about 11.5 crores expense coming every quarter. But next year that will go down materially to almost about 4 quarters. And from year after that, almost becoming negligible, right? So this 11.5 crores is cash ESOP expense, which is coming this year. Similarly, in quarter one and quarter two, we'll have this about 5.5, 6 crores of other one-time expenses. So what you're seeing as reduction in the net EBITDA from 60 crores to about 47 crores is largely on account of these ESOP and one-time expenses. Adjusted for that, actually, the EBITDA grew from about 60 to 65 crores, same 2 quarters. And at a hotel level, as I said, it actually grew from 65.8 crores to about 72 crores.
Got it. Now, again, like I said, I don't know if you are at the liberty to give me, and obviously you're not at the liberty to give me exact numbers, but could you give some color about whether the momentum that you would have seen in the RevPAR in quarter one, did it kind of continue into quarter two, or because it's not necessarily the strongest of quarters, there might be some moderation there?
So absolutely, actually the RevPAR, which grew at about 14% in first quarter, the quarter two, and we have reported that in our management presentation, Neeraj, so it's public information. It actually grew to about 15% year on year. So we are seeing slight improvement in the RevPAR growth quarter two versus vis-a-vis quarter one, year on year growth, right? Early indications for quarter three, and it's purely the momentum that we are seeing, is actually very, very good in the month of October. So we actually think that having delivered a 14 to 15% year on year RevPAR growth, as we head into the stronger quarters, which is quarter three and quarter four, we remain fairly upbeat.
Got it. Now, give me one small clarity if you can, Ashish. the narrative was that G20, the World Cup, plus maybe higher wedding dates, all of these put together would ensure that Q3 and Q4 would be very, very strong. And then the question came about what happens post that, because does that mean that the base effect would be too difficult for hotel companies to handle in the subsequent year? So I would love to understand for Samhi in particular, how big a material difference would these events would have made in your advance bookings, if you will? Is it very material to cause a problem in the subsequent FY25, or is it kind of just giving the right boost?
No, so Neeraj, there is, I think, I know there's been too much discussion about G20 and World Cup, way too much discussion, right? If you see quarter one RevPAR growth was 14%, quarter two RevPAR growth was 15%, right? And we had G20 in one quarter. We didn't have G20 in quarter one, honestly, right? So you're seeing that 14, 15% growth largely on account of demand supply, right? Really strong demand coming from almost all sectors of the economy. Neeraj, clarification. We run mostly business hotels in key metros. So when we talk about demand, we're talking about demand from business travel, right? So we are seeing demand from business travel remaining pretty strong quarter one and quarter two. Going into quarter three, if I have the first 11 days of operating data, if I look at that, right, you'll be surprised. What is really making me happy and smile is Bangalore, Hyderabad, not necessarily Ahmedabad, where we have 3 hotels and Pakistan match and World Cup, right? So as a hotel owner, I'm definitely smiling, but I'm not just smiling because of G20 and the World Cup. I'm smiling because in all of the core markets, the demand for business travel is increasing at a fairly rapid pace. There's not adequate supply coming in next quarter, next 4 quarters, next 8 quarters, next 12 quarters. So I think you will continue to see fairly encouraging growth in the sector, especially in key cities.
Got it. And for you in particular, last couple of questions. For you in particular, you have guided to a significant reduction in finance cost, and I presume by that, debt as well. At the same time, I'm presuming that there is expansion on the cards simply because there's just no supply for the industry at large. So how do you kind of navigate through both of these simultaneously?
So, Neeraj, often people ask me about PAT. When do you get positive, right? And I'm always a reluctant person to give guidance on PAT because there are a lot of accounting entries which can come in subsequent years. But what I can be very certain about is free cash. So if you just pick quarter one, right? Quarter one, if you look at our PAT losses were about 83.5 crores, right? That was a PAT loss. That included 107 crores of finance cost. That 107 crores of finance cost is going down to 60 crores. In quarter three, because we are in the middle of October, by the time we have reduced our debt, the entire impact may not be visible. But clearly from quarter four onwards, you'll see the finance cost having come down from 107 crores to about 60 crores, right? Then you have this almost, I would say 14-15% RevPAR growth that we've seen quarter one, quarter two. No reasons to believe that will not continue in quarter three and quarter four. With combination of two things, we do realize the company starts producing free cash pretty much from quarter three onwards, definitely stabilizing more in quarter four and beyond that, right? So what do we do with that free cash? First, I think in our portfolio, there is an opportunity to add about 600 rooms, Neeraj, right? We have 4,800 rooms today. We can take our portfolio to 5,400 rooms. And interestingly, the company does not need to make any acquisition for that. We don't need to buy land. We don't need to buy a hotel. These are either almost near ready hotels or there's a piece of land in Navi Mumbai for which material capital expenditure has already been incurred by the business. So from the free cash that we get in subsequent quarters now, quarter three onwards, right, we're going to focus on ensuring that we open a hotel in Calcutta next year. That's a 111-room Holiday Inn Express. We increase the capacities in a Holiday Inn Express in Bangalore, Whitefield, and the Hyatt Regency in Pune. And, all of these are core business markets. And in the longer term, we're intending to develop the 350-room hotel in Navi Mumbai, kind of coinciding that with what's happening with the Navi Mumbai airport and Navi Mumbai's connectivity with South and Central Mumbai. So the cash that we generate is going to be used for capacity expansion over the next, I would say, starting from next year, going on till FY27, FY28, plus almost 900 of our existing 4,800 rooms. We're going to take through a renovation and rebranding. And Neeraj, that's a core business model, right? Historically, whenever we have done a renovation rebranding, we've seen substantial change in the RevPARs of those hotels, right? And for that, we just need about 120 crores of free cash, not a very large amount of cash, right? So over the next, almost every quarter, you will see us using that free cash for changing the current performance of those 900 rooms of the 4,800 rooms. In addition, adding about 600 rooms, starting about 180 rooms next year, and then with Navi Mumbai and Chennai in the subsequent years, right? So I think that's how we intend kind of transforming the business, if I may use that word. If you see pre-pandemic, our EBITDA was 170 crores, Neeraj, right? We reported 311 crores for FY23 on a pro forma basis, including the acquisition we've made, right? Now, with the free cash coming our way and debt being substantially lower, and the tailwinds of this RevPAR growing in double digits, I think we're very excited about where we could take this business over the course of the next year or two.
Which would also mean that, sorry, last question, which would also mean that you would be comfortable with the net debt levels at the end of quarter 3 or quarter 4, as the case may be, because you'll use an increasingly larger portion of the free cash for renovation and expansion and not further debt reduction.
So, Neeraj, combination of both the things. Of course, most of our debt now is long-term, 12 to 14 years, but that means you have to repay something every year. So, with our scheduled repayments over the next, I would say, 18 months, right, from the free cash, plus the increase in the EBITDA, both on account of how our same-store hotels are growing and also how the new addition inventory we are putting and some of the renovations we are doing, we are fairly comfortable that we'll get to about 3.5 times debt to EBITDA by end of FY25, right? So, that's the real transformation, that from where we were till a few months back, and there's obviously a lot of noise in that, right? Till where we are now and where we'll be in the next 6 months is a massive transformation on the balance sheet, while we continue to see good momentum on the P&L.
Right. So, well, we'll talk about some of those numbers maybe when you declare your quarter 2 results, and I wish you all the best for that and more. And thank you for taking the time out and giving us a brief about what's just happened in terms of color for the last 6 months.
Talk to you soon, Neeraj. Thank you so much.
Well, thank you for your time, and viewers, thanks for tuning in.